Assalamualaikum warahmatullahi wabarakatuh everyone. Today we will be presenting company's analysis focuses on comparative financial performance analysis of RHB Bank Berhad and M-Bank M Berhad. Our analysis is based on the bank's annual reports for the financial years 2023 and 2024 using financial ratio analysis, year-to-year analysis and what-if analysis to evaluate their performance and investment suitability. We will begin with group members, which is ALEEYA binti SYAIFULRIMAN, SITI AQILAH binti KHALID, FARISHA IDAYU binti ROSLI, NURSALSABILA SAFIKA binti MARWAZI, Seri Izatul Isna HALIMIN, and SAKINAH binti OMAR. Let's proceed with the introduction. For introduction, I will briefly introduce RHB Bank Berhad. RHB is one of the largest financial services groups in Malaysia and offers a wide range of services including retail and wholesale banking, Islamic banking, as well as treasury and investment services. Besides Malaysia, RHB also has a regional presence in countries such as Singapore, Thailand, Indonesia, Cambodia, and Brunei, which strengthen its market position in Southeast Asia. For the years 2023 to 2024, RHB focused on maintaining financial stability, improving digital banking capabilities, and practicing strong risk management. These strategies support sustainability growth and long-term performance. Next is M-Bank Berhad, which is a key subsidiary of the M-Bank Group. M-Bank provides services such as retail banking, business and corporate banking, Islamic banking, and wealth management, mainly within the Malaysian market. During 2023 and 2024, M-Bank focused on improving operational efficiency, managing costs more effectively, and enhancing its digital banking platforms. These initiatives were implemented to strengthen profitability and competitiveness in a challenging banking environment.
This slide compares the liquidity position of RHB Bank and M-Bank for 2023 and 2024. First, on the current and quick ratio, RHB records 1.13 times in 2024 and 1.14 times in 2023. M-Bank records 0.88 times in 2024 and 0.86 times in 2023. RHB remains above the safe benchmark of 1. M-Bank stays below 1 in both years. This shows RHB holds stronger short-term asset coverage than M-Bank. Next, the cash ratio. RHB reports 4% in 2024, down from 5% in 2023. M-Bank reports 4% in 2024 and 5% in 2023. Both banks experienced a slight decline in cash reserve. Their level remains similar. Lastly, net working capital. RHB records positive working capital in both years, around 35 to 38 billion ringgit. M-Bank records negative working capital around minus 22 to minus 25 billion ringgit. This highlights a major contrast. RHB maintains a solid liquidity buffers, and M-Bank relies more on short-term funding pressure. Overall, RHB shows a stronger and more stable liquidity position than M-Bank across all indicators. This slide compares the leverage position of RHB Bank and M-Bank for 2023 and 2024. First, debt to asset ratio. In 2024, RHB recorded 88%. M-Bank records 82%. RHB relies more on debt to finance its assets. M-Banks show a lower risk profile in this area. Next, debt to equity ratio. RHB stands at 941% in 2024. M-Bank stands 833%. Both banks operate with high leverage, which is normal in banking. RHB carry a heavier debt burden relative to shareholder. For long-term debt to equity, RHB reports 46% and M-Bank reports 23%. RHB depends more on long-term borrowing. M-Bank manages long-term obligation more conservatively. Equity ratio remains low for both banks at around 9 to 10%. This reflects the capital-intensive nature of banking. Finally, times interest coverage. RHB improved slightly from 0.64 to 0.65. M-Bank dropped from 0.83 to 0.43. RHB show more stable ability to meet interest expenses. M-Bank faced higher pressure on interest payment in 2024. Overall, M-Bank maintains lower leverage. RHB carries higher financial risk but shows a better interest coverage stability. This slide evaluates how efficiently both banks use their assets. First, fixed asset turnover. In 2024, RHB records 12.81 times, MBank record 58.97 times. MBank use its fixed asset more efficiently to generate revenue. RHB remains stable but a lower level. Next, account receivable turnover. Both banks record 0.06 times for both years. There is no major difference in credit collection efficiency under this measure. For total asset turnover, both banks remain at 0.04 times. This shows similar overall asset usage efficiency. Lastly, average collection period. RHB stay at 0.04 days in both years, and bank increased to 0.05 days in 2024. RHB maintains consistent collection speed, and bank experienced a slight slowdown. In summary, MBank leads in fixed asset efficiency. RHB show a stronger consistency in collection management. This slide presents the profitability comparison between RHB Bank and MBank for 2023 and 2024. First, return on asset. Both RHB Bank and MBank record 1% in 2023 and 2024. This shows similar efficiency in generating profit from total asset. Next, net profit margin. RHB Bank maintains 21% in both years. MBank record 24% in 2023 and declined to 22% in 2024. MBank remains slightly higher. RHB shows stable performance. Finally, return on equity. RHB improved from 9% in 2023 to 10% in 2024. MBank declined from 10% in 2023 to 9% in 2024. RHB overtake MBank in 2024. Overall, both banks shows comparable profitability. RHB demonstrates improving returns to shareholder, and bank shows a mid-decline in recent performance.
Based on our ratio analysis, we will now present the conclusion and investment decision for our HB Bank and MBank. Based on the ratio analysis for 2023 and 2024, both banks show stable performance with different strength. Our HB Bank performed better in liquidity, indicating that stronger ability to meet short-term obligations. However, MBank shows lower liquidity but stronger efficiency in asset utilizations. In terms of leverage and profitability, both banks are comparable. MBank records a higher profit margin, while RHB Bank shows improving returns to shareholders. Overall, RHB Bank is stronger in stability, while MBank performs better in efficiency. Based on this analysis, RHB Bank is more suitable for risk-averse investors who prioritize liquidity and stability. MBank is more suitable for investors with higher risk tolerance who are seeking better efficiency and profit margins. In conclusion, the investment decision depends on the investor's risk preference. Next, I will pass to the next presenters.
Next is year-to-year analysis for a statement of financial position. Based on the Y-to-Y analysis, RHB Bank Berhad shows stronger and more consistent balance sheet growth compared to MBank Malaysia Berhad. For total asset, we can see that RHB recorded steady growth, increasing by 5.77% in 2023, which is 17.94 billion ringgit, and 6.46%, which is 21.22 billion ringgit in 2024. This growth was driven by higher loans, advances, and financing, which increased by 7.2% in 2024. Indicating that active credit expansion and business growth. In contrast, MBank's total assets increased sharply by 12.91% in 2023, which is 22.57 billion ringgit. However, it declined slightly by 67 billion in 2024, suggesting more cautious asset strategy and portfolio rebalancing. And in terms of liabilities, RHB increased by 15.79 billion ringgit, which is 5.60% in 2023, and rose by 6.58%, which is 19.60 billion ringgit in 2024. This is due to the growth in customer deposit, which increased from 227.16 billion in 2022 to 249.57 in 2024. This shows a strong customer confidence and stable funding. Meanwhile, MBank's liabilities spiked by 14.34% in 2023 but fell by 1.16% in 2024. This was because of the lower securities sold under repurchase agreement and reduced placements from financial institutions, indicating tighter liquidity management. So for the equity, both banks recorded positive growth. We can see that RHB equity increased by 2.15 billion ringgit in 2023. Meanwhile, 1.62 billion ringgit, which is 5.24% for the next year, supported by retained earnings. MBank's equity rose by 0.37% in 2023 but spiked to 7.86% in 2024. This shows a massive improvement of capital strength despite slower asset growth. Next, we are going to take a look at Y-to-Y analysis of statement of profit or loss. In terms of profitability, RHB Bank Berhad demonstrate more stable earning growth compared to MBank Malaysia Berhad. RHB's net profit increased by 129.42 million ringgit, which is 4.83% in 2023, and grew further by 313.62 million ringgit, which is 11.60% in 2024. This improvement was supported by higher interest income, which reached to 10.13 billion in 2024, along with stronger other operating income. On the other hand, MBank recorded net profit growth of 55.5 million, which is 3.45% in 2023, and a huge spike of 243.51 million ringgit, which is 14.76% for the next year. However, its net interest income declined by 6.31% due to the significant 45.96% increase in interest costs for 2024, which create margin pressure. Higher impairment charges and restructuring expenses caused MBank's earnings become more volatile over the period.
Based on the year-to-year analysis of the statement of financial position and profitability from 2023 to 2024, it can be concluded that RHB Bank outperformed MBank Berhad in terms of financial stability, consistency, and overall performance. RHB demonstrates steady growth in assets, loans and deposits, and equity, reflecting strong depositor confidence and effective capital management. Its profits remain stable, supported by rising interest income and diversified operating income, even with higher impairment allowance. This indicates strong income resilience and efficient cost control. In contrast, MBank shows greater volatility with a decline in assets and liabilities in 2024, lower net interest income, and higher interest and impairment costs. These factors suggest margin pressure and revenue uncertainty, which may affect future profitability. Therefore, RHB Bank Berhad is the preferred choice as it offers more stable earnings, lower risk, and sustainable long-term growth, while MBanks may be suitable only for investors with a higher risk tolerance.
For the what-if analysis, I will explain one by one. For the first one is data table analysis. This presentation will focus on the impact of revenue, cost of goods sold, operating expenses, depreciation, interest expenses, and tax on profitability for both companies. For both companies, RHB and AM Bank, the revenue consistently demonstrated a positive relationship with profit, indicating that higher revenue levels significantly improve profitability. RHB Bank Berhad recorded a higher profit ratio overall, with maximum profit exceeding RM7.4 billion under favorable revenue and cost conditions. Meanwhile, AM Bank Berhad achieved a maximum profit of approximately RM10.3 billion in revenue-driven scenarios, but remain more sensitive to cost increases. Cost-related variables showed a clear inverse relationship with profitability for both banks. Higher cost of goods sold, operating expenses, interest expenses, and tax level will result in declining profit. RHB Bank Berhad showed relatively stronger resilience to increase in operating expenses and depreciation, as profitability declined at a slower rate compared to AM Bank. In contrast, AM Bank profitability was more significantly affected by rising interest expenses, highlighting its greater exposure to financing cost fluctuation. Depreciation demonstrated a positive relationship with profit for RHB Bank Berhad, reflecting its accounting impact rather than operational cash outflow, whereas AM Bank analysis focused more on operating and interest expenses. Tax analysis for both companies confirmed that higher tax level reduced net profit, although revenue growth partially offsets this effect. Based on the data table analysis, both RHB Bank Berhad and AM Bank Berhad benefit from revenue growth, but RHB Bank Berhad exhibits stronger and more stable profitability across multiple scenarios. RHB higher maximum profit level and lower sensitivity to cost fluctuations suggest a stronger overall profitability position compared to AM Bank Berhad. Next, I will explain about the scenario manager analysis for both companies, RHB and also AM Bank. For RHB, under the revenue and cost of goods sold, RHB achieved its highest profit of RM3.44 billion ringgit Indonesia in the best case scenario. This is supported by higher revenue levels. The best scenario generates a stable profit of RM3.12 billion, while the worst case scenario records a lower profit RM2.81 billion. This is mainly due to the reduced revenue. For the depreciation operating expenses scenario, the best case records the highest EBIT of RM4.45 billion, indicating the company have strong operating performance. The best case scenario reflects normal operating conditions with EBIT of RM4.05 billion, while the worst case produced the lowest EBIT of RM3.64 billion. Similarly, the operating expenses and other expenses scenario shows that profitability declines as expenses increase. Despite this, RHB maintained positive EBIT across all scenarios, demonstrating strong earnings capacity. Finally, under the tax and revenue scenario, the best case generates the highest profit of RM3.44 billion, supported by the strong revenue performance. Even in the worst case, RHB remained profitable, highlighting its financial resilience. While for AM Bank Berhad, for the revenue and cost of goods sold scenario, AM Bank records its highest profit of RM2.03 billion in the best case scenario. Meanwhile, in the best scenario shows stability profit of RM1.84 billion. In this case, the worst case profit has achieved to 1.66 billion due to the lower revenue level for the worst case scenario. Meanwhile, in the operating expenses and interest expenses scenario, profitability is highly sensitive to cost changes. This is because the base case scenario yields at RM2.03 billion, whereas increased expenses in the worst case scenario reduce profit significantly. The revenue and interest expenses scenario further confirm that although higher revenue improve profit, rising interest expenses place pressure earnings of the company. Despite this, AM Bank maintains positive profit across all scenarios. Lastly, under the tax and revenue scenario, the best case scenario records the highest profit of RM2.03 billion, while the best case and the worst cases remain profitable, demonstrating earnings stability of the company.
Next, goal seek analysis. Goal seek analysis is a tool that helps management work backward to determine the input value needed to achieve a specific target outcome. In this analysis, the objective is to estimate the expected revenue for 2025, assuming a 10% increase in net income from 2024. For RHB Bank Berhad, net income is expected to increase from 3.12 billion ringgit in 2024 to 3.4 billion in 2025. Based on the goal seek results, revenue only needs to increase moderately from 14.87 billion to 15.24 billion to achieve this target. All other goals, including operating expenses, interest expenses, and tax, are assumed to remain unchanged. This indicates that RHB has strong operating efficiency, a stable cost structure, and a scalable profitability. In contrast, for MBank's Berhad, net income is expected to rise from 1.84 billion to 2.03 billion under the same 10% growth assumption. However, the goal seek analysis show that revenue must increase significantly from 8.53 billion to 12.88 billion to achieve this target. This suggests that MBank's profitability is more sensitive to revenue changes, mainly due to higher cost pressures and margin constraints. Overall, the goal-seek analysis shows that RHB Bank Berhad is better positioned to achieve profit growth with smaller revenue adjustments, while M-Bank faces higher revenue volatility and lower profit scalability. Based on the what-if analysis, including data table, scenario manager, and goal-seek analysis, it can be concluded that RHB Bank Berhad is financially stronger and more resilient than M-Bank Berhad. From the data table analysis, RHB Bank shows stable and predictable profitability as it is able to absorb rising costs through diversified income sources and effective expense management. In contrast, M-Bank displays greater volatility with fluctuating assets and declining net interest income due to rising interest expenses, indicating weaker earning stability. The scenario manager analysis further supports this finding. RHB is able to maintain profitability even under the worst-case scenario, reflecting strong operational resilience and cost control. However, M-Bank's net profit declines more sharply under adverse conditions, highlighting its vulnerability to economic changes and cost pressures. Finally, the goal-seek analysis shows that RHB requires only a small increase in revenue to achieve a 10% growth in net income, indicating efficient operations and a stable cost structure. In contrast, M-Bank needs a much larger revenue increase, suggesting higher revenue volatility and margin pressure. Overall, RHB Bank Berhad is the better choice, offering stronger financial stability, lower risk, and sustainable long-term growth. M-Bank may be suitable only for investors with higher risk tolerance who are willing to accept earnings volatility.
For conclusion and recommendation, based on our financial analysis, RHB Bank Berhad shows a strong overall performance. The bank maintains a strong liquidity position with current and quick ratio above 1, indicating its ability to meet short-term obligations. In terms of profitability, RHB demonstrates stable return supported by consistent return on assets and improving return on equity. The year-to-year analysis also shows a steady growth in assets and profits. In addition, the what-if analysis indicates that RHB can achieve its profit targets with only moderate increases in revenue, reflecting a good cost control. Therefore, RHB is suitable for risk-averse investors who prioritize stability and consistency. For M-Bank, the analysis presents a more mixed outcome. The bank performed well in terms of operational efficiency and profitability margins, showing effective asset utilization. However, M-Bank's liquidity position is relatively weak, with current and quick ratio below 1 and negative net working capital. This indicates higher short-term financial risk. Furthermore, M-Bank's earnings show a more volatility in the year-to-year analysis, and the what-if analysis suggests that a larger increases in revenue is needed to achieve profit targets. As a result, M-Bank may be more suitable for investors with a higher risk tolerance. For final conclusion and investment choice, although both banks have their own strength, RHB Bank Berhad is the better overall investment choice. RHB demonstrates stronger liquidity, more consistent financial performance, and lower overall risk compared to M-Bank. While M-Bank shows a better efficiency and profit margins, its weaker liquidity position and earning volatility increase investment risk. Therefore, for investors seeking long-term stability and sustainable growth, RHB Bank Berhad is very recommended as the preferred investment option.